2024. So October 9th, 2024, meetings for our real estate agents, and we want to get started with our interest rates. So the interest rates, according to Freddie Mac, they were hovering around 6.12%. That is not the case because we are talking about real time, a little bit better stats. We're looking at Mortgage News Daily. So the interest rates already went up from 6.12, which was the lowest that we saw, to 6.62. So when this happened, the first question that everybody asks is that what is the reason? What is the reason that the interest rates went up last week? So if you are a loan officer, you should definitely know this. But if you are a real estate agent, I encourage that you guys do know this, which I'm going to go over. So when you're talking to your clients, you guys know, they know that you guys are staying up to date with that. Okay, so the main reason that the interest rates went up last week because of your unemployment data. So when economy is doing good, that means everybody's employed, everybody's working, right? So the unemployment rate went down. It was at 4.2, it came down to 4.1. So what does that mean? That the Fed is going to say, hey, we're doing good right now. Economy is doing good right now. We don't have to do a rate cut. So when we receive data like this, unemployment data, and it goes in opposite direction, then you're going to see interest rates go up. And this happened within few hours, right? We're not waiting 6 weeks for the Fed to do a rate cut. Your mortgage-backed securities, your MBS, they react right away. So because we are paying attention to this on a regular basis, I'm even sending you guys messages, hey, the interest rate might is going to go up. So there's some files that we're working on. We highly encourage that we do a rate lock. We did it for a few files at 6.11, 6.12. There were some borrowers who said, no, let me just wait to see if it comes down. It didn't come down, it went back up. So every month we get new data that has to do with unemployment. If the unemployment rate goes up to 5%, then the Fed will say, hey, we are headed in the wrong direction. We need to do a rate cut. But if the unemployment rate goes down, then Fed doesn't need to do a rate cut. Okay, so unemployment data comes out every month. It came down just 0.1%, and it made a big difference in our interest rates. So the lowest that we saw was 6.11, and now as of this morning, we are seeing 6.62. That's a major difference just with one news. So every week, the people who are joining us live, thank you for that. People who are watching this recorded, thank you for that. But just know the fact that, hey, we have to stay on top of the market. So if you're still talking to your clients regarding 6.11, that is not the case anymore. Okay, so these rates are changing on a daily basis. So you want to encourage your client to pay attention to that as well. Okay, so the unemployment data is at 4.1% right now. This is a real example of one of the borrowers. He was making over $100,000. So he's confident that he can purchase a house that was around $600,000. But it's not the case for him either because of his monthly debt. So his annual income was $123,000. Down payment was $75,000. And their monthly debt is $2,200. Definitely on the higher end. Even with 6.62% interest rate, and their property taxes of $4,000. That means they're buying a really small, cozy house. And the property insurance around $1,500. The max they can go with the conventional loan for $441,000 house. So you know that they need to work on their credit scores. That's one, and on their monthly debt. So look at the snapshot on the bottom here. They actually own a car that's from Toyota. They have a balance of $37,000. He owns a Honda car for a $31,000 balance. And there's another one from CarMax. I don't know which type of car it was, but another $30,000 balance on that. That means that person, even though they're making over $100,000, they have a huge obligation every month. They have to come up with $2,200 every month to make these car payments. So do you think they can afford to buy a $600,000 house or $700,000 house? Absolutely not, because of their monthly debt. So you have to tell your client, even income is one thing, your debt is even more important. Your debt to income ratio is the most important thing when it comes to qualification. Okay? So this person can either say, hey, I'm going to get rid of one of the cars, or I'm going to have add another co-signer that would bring in more income and not more debt, right? So these scenarios, a loan officer will talk to them, but you as a real estate agent should know the concept. Hey, income is good, but we also need your debt to be cleared as well. Okay. So the rate cut's supposed to push the mortgage rates lower. That's what's majority of the news headlines that I saw, that everybody was expecting the mortgage rates to come down to even 5.99. Even we were having that conversation just a week ago, right? Because they were at 6.11. It took an opposite direction just because of the data that we're seeing right now. If unemployment rate goes up, then we will see the interest rate goes down. Okay. The second data that we're looking at is your inflation data. Inflation is already at 2.5. This is where the Fed wants that interest rate or the Fed inflation data to be at. Less than 3%. Their goal is 2%, but it's right now at 2.5. So they're not going to be in a rush to do a rate cut if the inflation is in control and the unemployment data is on their favor. Both of those numbers are in Fed's favor, so there's a good chance that they will not do a rate cut on the next meeting, or if they do, it might be only 25 basis points. Okay? So just know that hey, it's just not what Fed is saying, but there's the data that's coming out every month. Okay? Another one, this article caught my attention too because this person bought a brand new house. She thought she was buying a dream house, and then she found out that her family was getting sick. They were getting sick because they were inhaling, there was a hidden mold in the property, right? Brand new building, how could you have a mold in those foundation? How could that be possible? Is that because the developer who actually, made that house or built that house, didn't really care, right? They just were thinking about their top dollar, or they were just thinking about their net profit. So you have to make sure that your client that's purchasing a brand new building, is it actually brand new construction? Is it gut renovation? Meaning they took down the whole house and then they rebuilt everything? Or did they just leave all the old walls and just renovate it? Big difference in newly built, which is your gut renovation, or your recently renovated, you're going to pay a different price for that. Okay. So this family, she's suing everybody. She's suing the developer. She's suing everybody. But let's see how far she goes. But she says she's stuck, right? She had almost 9% interest rate, and she's stuck in this house. She has, because the family's getting sick. They're literally getting sick because of this mold. So when it comes to realtors, guys, we're putting a lot on the line when these guys are trusting you. All these home buyers are first-time home buyers are trusting you with a lot. So never skip a home inspection. I hear from a few our realtors, hey, inspection can kill a deal. Yes, absolutely, it can kill a deal. But at the same time, would you rather have a client that's getting sick after the closing and cursing you out and giving you a hard time, or a client that's going to be really happy even if you kill that deal because there was actual issues in that property and you found them another one? You just can't give up on that client because you're going to be on their side all the time. You don't want to do anything where it's not going to be beneficial for them. So please, guys, do not skip home inspection. The inspector will find out if there's any issues in that property, so you want to make sure we don't skip that. Okay. Next is that, guys, is it seller's market or buyer's market? I saw some of our agents started using Elto's research. Great. Some of you guys sending screenshots to your clients. Great. I encourage everyone to do this. If you're about to make an offer in Bronx, you want to do this research and say, hey, how's the market in Bronx? Janet, you have a listing in Bronx, right? Probably you did the same thing for Bronx listing. So Bronx is a slight seller's advantage. It's not, it's still when you're putting in an offer, your offer might not be as strong as you would put in Ozone Park. In Ozone Park, right in our neighborhood, it is a strong seller's market. Score of 56, which is a pretty high score. That means the inventories is limited in Ozone Park. Any property that comes on the market goes fairly quickly, right? There are many, many pros as a listing agent when you're listing it in a strong seller's market. But if you're representing the buyer, your offer should reflect that. If it is a buyer's market, put your offer on the lower end. If it's a seller's market, put your offer on the higher end. Okay, do your research. This was another issue that one of our agents just closed a deal recently, and after the closing, the gas company stated that the previous owner is not active or their account is not active. So how do we have access when we did a final walkthrough and have access to the gas, right? When he went in the kitchen, he turned on the stove, everything was working, right? So how could that be possible? So the new homeowner have to take many steps to resolve this. They have to get in touch with this person, that person. There's at least 3 or 4 different steps to do a home inspection for them. And and the person was saying, "Hey, how did this actually happen?" And we have closed hundreds of deals and we never went through this before. If we did have those issues, if the gas line was not there, we just made sure that gas line comes back on before the closing. But in this case, I don't know how they skipped it, but we this got to be a learning lesson for all of us. So when usually a attorney, right, your buyer's attorney will view your water bill. So here's the water bill. We're gonna split it. The closing's happening tomorrow, so we're gonna split that bill accordingly. But they're not doing that with the gas bill or any electric because those are usually on month-to-month basis and they usually are taken care of. If they're not, the services are cut off. But my thing is that we can learn from this. So why don't we ask our seller or the listing agent, hey, we had this issue with another agent or client, but we would need a copy of your gas bill or electric bill for last month. I just want to make sure that it is active and you guys are paying on time. So I don't want my buyer to have any issues after the closing. Okay. So the simple takeaway is that, hey, I'm about to do a final walkthrough. Is your gas and electric companies are being paid on time? Just show me proof that everything's active. Okay. I want to give big congrats to our agent Damien for closing his deal here in Brooklyn. We have a agent, Navneet. She's going under contract on 106th Street. Congrats to her. We have we have a new listing by Saab in Huntington Station there in Long Island. So if you have a buyer for that, please reach out to Saab. And one we have for Paul, this is on 115th Avenue, and you can reach out to Paul. Right? We have other listings by our more agents. AP has them, Mr. Ali has them. I believe Janet has a business for sale. So you guys can take a look at those listings online and connect with those agents. Okay? And now is our main presentation. This is where I need your feedback, guys. I have put a lot of hours. Last night I was there until midnight just trying to work on this. I feel like the presentation that we have right now, right, the buyer's presentation that we have right now, we can improve it. And we did that, right? But this is where we need your feedback. Just unmute yourself if you want to speak up and say, Lucky, we should be adding this, removing this, but provide your feedback. So this way, you guys are going to be doing this presentation to your clients. And I highly recommend that you do it with every client, even if you don't know if they're going to work with you or not, but you should be doing a presentation as many as possible. Okay, so let's get started with that, guys. So first of all, this presentation is going to be in a longer format. So it's going to be 8.5 by 11 page, so standard page. So you're going to see a bundle of this. We will print out, we will do a high quality printout of this, but I want to finalize it first. And then, maybe by end of the month, we will have this printed out, right? But we want to provide as much value as possible to our clients, right? Assuming that they will work with us. If they choose not to work with us, that's perfectly fine. You move on to the next one. But you want to do your part. Let me do a presentation to you and see if that brings any value to you. Okay? So, Mr. Buyer, you're gonna be having this conversation in our conference room here. You can do this over the phone, but you're not gonna bring that much value. You're not gonna get their attention over the phone. Or if you try to do this virtually, you're probably not gonna get that full attention. But if you're in person in the office, they're gonna be, focused on your presentation. So first of all, it's called Keys to Homeownership. Right? Keys to Homeownership, your ultimate first-time home buyer guide. We're going to explore home options. We're going to understand your credit scores and we're going to follow simple steps to buy your first or buy your dream home. Okay, we have a few photos. So now I'm going to start zooming in, guys, so you guys can see it clearly. So that's your first page. Next page, I'm talking to Mr. Buyer. Hey, Mr. Buyer, I'm going to be showing you who's involved. We have your seller and your buyer. Seller's goal is to achieve the highest possible price for their property. They have one property to sell, so they want to get the best price possible. And buyer's goal is to secure the best deal by paying the lowest price possible. And I can help with that, right? I'm going to do the research and I'm going to make sure that we are paying a fair price or a price that's going to be on the lower end, not what the seller wants. Okay. When it comes to real estate agent, listing agent is going to be representing and prioritizing all your seller's best interest. So listing agent is your seller's agent. He's going to have his best interest. You would want somebody on your side as a buyer's agent, and that buyer's agent is going to be providing support and protect your best interest. You have a loan officer that's going to be providing your loan options and give you a pre-approval. He's going to go through a loan application after we found the house and you're under contract. Okay. Your home inspector is going to evaluate the property's condition and identify if there's any potential issues with that property. You have your attorney. He's going to be a legal professional that's going to ensure that your transaction meet all the legal requirements. Everything that we negotiate is going to be on the contract, and your attorney is the one that's going to be making sure that you're protected on that contract. Okay. You have an appraisal person is going to come in and do a independent estimate of the property value. I can say, hey, this is the price, the seller wants this, the bank wants to verify if that price is actually fair or not. Okay. Then you have a title company that's going to ensure your property has a clear title, and they're going to do a transfer your title to you from the old buyer or from the old seller. One of the last stages, we're going to have a surveyor come in and they're going to measure and map your property's boundaries. And we're going to go through all these steps in a little bit. You have an insurance agent that's going to come in and secure a coverage for your property and make sure your property is protected after the closing as well. So, few quick tips for any of these people that you're going to be using, including myself. You probably want to search or Google their ratings, see how the company is doing. So for us, you can search Google LJ Realty Team on Zillow, Yelp, or Google and see our feedback there. And you want to consult with at least 2 or 3 professionals to compare their services and fees before making that decision. So Mr. Buyer, you're going to be buying a house, so I want to make sure that you're working with every one of them that you can trust and you feel comfortable working with these professionals. Okay. So next is your budget. We want to make sure we want to review your financial situation, including your income, your savings, and your debt. When it comes to your down payment, there are plenty of programs that allows you to put down 3%, 5%, 10%, but it is going to be a portion of your home purchase price that you're going to be paying upfront. That will reduce your loan amount, right? Because you're putting down 3, 5, 10, 20% down payment. That means you need a lower loan amount because you're paying this from your pocket. You also have to worry about your closing cost, which is between 3 to 5%. These are your fees, right? In our old slide, it doesn't say the word fees. I want to emphasize on that because these are your fees and expenses to get the loan. This may include your origination fees, your appraisal cost, your title insurance, your county recording fees, your attorney fees. Okay? So your down payments and your closing cost can vary depending on the loan type and the lender that you're going to be using. So you need to bring in your down payment and your closing cost. Okay? So when it comes to income, guys, most lenders or Mr. Buyer, when it comes to income that we need, or a lender will look at your income and they would need to see at least 2 years of income. If you had job changes, if you switch jobs but stay within the same field or earn even higher income, lenders will still look at this as stable employment. If you switch jobs and you go from being W-2 to now 1099, we might have an issue. But if you're switching jobs and is in the same field, no problem. Okay. Or if you or one of the co-borrowers just graduated from college and they got a job letter, we can still use that. Or your lender should be able to use that as well, Mr. Buyer, that if you recently graduated from college and have a job offer, you don't need to wait 2 years. That is a very common question that, hey, I want to add my son, my daughter, my cousin, my nephew, but they just graduated and they have a job letter for $40,000. Could I use that? Absolutely, we can. We need to see their uh, you know, the college degree that they actually graduated and the job offer letter, and we can use that. Okay. Most lenders will require 2 years of tax return, 2 years of your W-2s or 1099, and 1 month of your pay stubs. Okay. Most lenders will allow up to 4 borrowers on a loan application. Okay. And now let's talk about your credit scores. So typically when we're looking at Credit Karma or any of the websites, we see 2 credit scores, but we even put the company's name there for you guys. 3 companies that we need to see the credit scores from: Equifax, Experian, and TransUnion. So some of the factors that influence your credit scores is your payment history, your how much are you using your credit cards itself, how long you had your credit history for, and are you applying for new credits or not. And the next question people usually ask, Mr. Buyer, is like, how many open accounts do I need? A lender will typically prefer to see at least 3 open accounts. If you have 2, that still might work, but still you want to have a goal of having 3 open accounts under your name. And if you need to improve your credit scores, you can do that by paying down the debt, avoiding any late payments, and reframing yourself from opening up new accounts right before applying for a mortgage. Okay? And if you put down less than 20% down payment, there's going to be a mortgage insurance. And the cost of your mortgage insurance will vary from, it's usually higher for borrowers with lower credit scores. So if your credit scores are on the lower end, you're going to pay a higher mortgage insurance. Okay. Next, we even give you a full breakdown now that, hey, what is your minimum credit scores needed for different loan types? So for FHA, we need 580. For conventional, we need 620. For non-QM, including no income check loans, we need 690 or more. Some of them will say 700, some lenders will say 720, but at least 690 or close enough to that. But we're giving them a full picture of what even a loan officer might be giving them. If you give them this information up front, guys, I think you guys bring a lot of value to them. Okay. And you want to tell them, hey, quick tips here for you guys, that you want to choose a loan officer who performs soft pull on your credit. You did not even find a property yet. So a loan officer should not be doing a hard pull to hurt you or damage your credit scores in any way or form. So I highly recommend that you go see a loan officer that will do a soft pull. If they ask you, do you know anyone? Of course, LJ Mortgage does that. Any client that comes in, we do not do a hard pull in initial stages. Okay. Then we have is that higher credit scores. If your credit scores are improving, that's a good thing for you. That means you will get better loan terms and your lender will offer you lower interest rates. Okay, so I want to give you guys an example, Mr. Buyer. Let's say if we're getting a loan under your wife only and her credit scores are 700 from one of the companies, 710 from the second company, and 720 from the third company. That means for wife's credit score, we can use 710 because that's the middle score from those 3 companies. And she meets the requirements for FHA, for conventional, and for your non-QM loans. Okay. Now, if the wife says, I want to add husband to this application as well, but his credit scores are the following: 650, 660, and 670. So his middle score is 660. Now he meets the requirements for FHA and conventional, but he does not meet the requirements for non-QM loans. Okay. Now, if they decide to add another co-borrower, maybe sister-in-law, brother-in-law, a family member, and their credit scores as follows: 590, 610, and 615. So for sister-in-law, we have 610 credit scores. She meets the requirements only for FHA. So if you decide on the bottom here, if the sister-in-law is added to the loan, the lender will only offer FHA loan option. Why is that? Even though the wife and husband's credit scores are higher. Why is that? Because they're going to use the lowest credit scores for the worst candidate. So for if it was just the wife, we're going to be using 710. If it was just the husband, then we would use 660. So we forget about the person that's on top. We always looking at who's the worst candidate. So in this case, maybe you want to leave out your sister-in-law and find someone else that has higher credit scores too, if you want to go with conventional loans. Okay. So I think with this, they will get a full picture what credit scores, minimum credit scores are on the top slide, right? On this page here. And on the next page, you're giving them a full example what it really takes. Maybe they do not want to add their sister-in-law to this file. Okay. Then you want to tell them, I really like this slide here too, guys, is your loan option. You're not a loan officer, we know that, but you know enough guidelines to guide them that, hey, these are the loan options that might be available for you. So if you're going to go with FHA, we need credit scores. We already learned that on top slides, 580. Down payment, you need 3.5%. Closing cost is going to be 4 to 6%. And your upfront cost, this is going to be upfront mortgage insurance because you're putting down less than 20% and you're going with FHA loan, you got to pay 1.75% for that. Okay. And your residency, you have to live there because this is an FHA loan, you have to live there for at least 1 year. And your debt to income, how much income you have versus how much debt you have, that ratio can go up to 54%. Okay. So you're giving them a loan option, all the breakdown, the guidelines for FHA. And for the mortgage insurance, that is a common question. Hey, I'm putting down less than 20%, and you told me about mortgage insurance. How long will that last? If they're going to be going with the FHA loan and they're putting down less than 10%, the mortgage insurance is there for the life of the loan. That means it will never goes away. If most people are putting down 3.5 or 5% for the FHA, they need to refinance eventually because their mortgage insurance is never going away. It will get removed after 11 years if they put down more than 10%. Okay. On top of that, we're even giving you the waiting period if they went through bankruptcy, short sale, foreclosure, right? We're giving them all these years. Let's say you have one of the co-borrowers added to your file and they had a bankruptcy last year. That means you cannot add them. You need to make sure that anybody that you're adding to the loan file meets all of these guidelines. Okay. Then I'm going to go with conventional loan. Hey, we're going to compare FHA to your conventional. For conventional, you need credit scores of 620. We learned that on top of the slides as well. But for your down payment, you can put down as low as 5% for your conventional loan. Your closing cost is going to be between 3 to 5%. And we mentioned upfront mortgage insurance for FHA. There's none for your conventional. So you're nearly going to pay 1.75% for your FHA, and you don't have to worry about that when it comes to conventional loans. And for your residency, you can live there or you can rent it out from day one. It could be your primary or rental property. And debt to income ratio, what is your income versus your debt looks like, they can take it up to 49%. And mortgage insurance we spoke about, it automatically should get removed after 20% equity. Right? With your FHA, it does not go away if you put down less than 10%. Now with conventional, you can put down whatever amount, but as soon as you hit 20% equity, your mortgage insurance should go away. And we spoke about down payment of 5%. That is for 1 to 2 units. If you're looking for 3 or more, then you would need 20% or more. And again, we're telling you the waiting period. If you want to go with FHA, FHA allows you to buy another property even if you went through bankruptcy after 2 years. But when it comes to Conventional, you got to wait 4 years. Okay. So I'm giving you a clear picture what is FHA versus conventional looks like, Mr. Buyer. You can decide and speak with a loan officer and see which loan that you want to go with. If it happens to be you want to go through a non-QM or no income check loans, then your credit score needs to be really solid, 690 or above. And down payment, I don't think there will be any loan option for non-QM or no income check loans where you need to put down or you can put down less than 20%. Most of them will require 20% or more. And for your closing cost, non-QM are usually on the higher end, so it's between 5 and 7%. There's no upfront mortgage insurance for them because you're already putting down 20%, and there's no mortgage insurance for these type of loans. Okay, some of the names for these loans are bank statement loans, 1099 loans, DSCR loans. You need to speak with the loan officer and see if you qualify for any of them. As a first-time home buyer, I'm just telling you what loans are usually available, and then you have to decide which loan option that you actually want to go with. Okay. Next, Mr. Buyer, even though you're going through a transaction right now, I just want to prepare yourself with top five don'ts. Do not do these things right during your home buying process. It can put the whole deal at risk. This have happened in the previous transactions, so we want to learn from that. Do not apply for new credit cards. Do not make large payments, large purchases on your credit card. Do not go buy a car. I just gave you an example. Person having three cars, they don't qualify. You haven't bought the new house yet, so don't buy furniture right now. No large purchases at this stage. Do not close any existing accounts. This can actually hurt your credit scores. Even if you have zero balance on it, don't touch those. Your loan officer needed that to be open, and don't miss and don't make any late payments. That will hurt your credit scores as well. And we had this case too, someone depositing $20,000 in their bank account cash, and now the lender wants to know, where did this cash come from? Your income is X amount. How could you do this 3x or 4x in your bank account? Where did this money come from? So avoid any of these things when it comes to home buying, right? So you want to avoid these top five things. And when it comes to property, guys, Mr. Buyer, we want to work as a team, right? We want to find your dream house. I will be sending you emails, text messages, right? You will receive a instant text or email notification at the moment that the new property hits the market. I have tools for that. I'm going to set you up as soon as the new property comes on. I'm going to send you that property in your text message. And did you or your family members set up Zillow alerts, right, or Redfin or any of these websites? If you did, that's great. That's absolutely fine. Just send me the address that you want me to schedule a showing for, right? Again, we're working as a team. We want to make sure that even if you see some properties that might be listed 6 months ago, might be for short sale foreclosure, and you want me to still show you, don't hesitate. Just send me the address. Okay. And how about open houses? There are many times you might be tempted to go see an open house. You have to go view it with me. So let's view it together. Tell me, hey, I want to be there. I'll make sure that I'm there at the same time as well. Okay? Let's set a goal to find your next or your perfect property within the next 30 days. If I start showing you today, I guarantee you will find something as long as you're willing to do the same. So as a realtor, my interest is your best interest. I know it sounds cheesy, but that's what it is, right? That my interest is your best interest. That I'm going to be always on your side. I'm going to research before every offer. I have many tools to compare home prices and allow us to put a competitive offer. It can save you $10,000, $20,000, whatever offer price you're thinking. Maybe I can do even a better job for you and save you some money just by providing you screenshots of different home evaluation using different sources. Okay. And when it comes to negotiation, I'm not going to be just negotiating the price, but also the repairs and contingencies, right? These are going to be the conditions on the contract that's going to protect you, which are the following. You have your home inspection, bank appraisal, financing, title contingencies. And then I want to review all those contingencies with them. I have your home inspection. This is going to uncover any potential issues, right? We need a licensed professional that's going to check your foundation, your walls, your roof, your attic, your plumbing, your electric, everything inside out to make sure that property is livable and they don't have any major issues. If there are some issues, there's major issues, we can either withdraw your offer, that means we made a good decision, that property was no good for you, or we can renegotiate. If the roof needs to be replaced and it's going to cost us $7,000, let me ask for $10,000, in renegotiating. If our offer was accepted at $600,000, let me try it for 590. Okay, and the cost for the home inspection is going to be between 350 to 550 per uh, for a single family. When it comes to appraisal, am I paying a good price, right? Or am I getting a good deal? Or am I paying going to be overpaying for this property? That what appraisal does. It answers those questions by evaluating your property's value. A licensed appraisal comes in. Usually, it's hired by the lender. You're paying for it because you're the buyer, but that appraisal is going to make sure that the price that we're putting in, that we are going under contract with, the bank actually agrees with it and they're satisfied. The lender's protection is a safeguard for the lender to ensure that they're not lending more than the property's worth. Okay. And if the appraisal comes lower, then we can have an issue, right? But guess what? You're going to be protected with your bank appraisal contingency. So if we're going in a contract for $600,000 and your bank appraisal is at 550, we have $50,000 difference. Then we have to renegotiate or kill the whole deal. On the other hand, if the bank appraisal is higher, right? If they say it's actually 620, that means you're getting a great deal. You're getting $20,000 in equity from day one. So you always want to include a bank appraisal contingency in the contract, and the appraisal is going to cost you between $500 to $700 when it actually happens. Okay. Next is your financing. Mr. Buyer, you have a pre-approval. I don't know what type of loan officers that you are working with. We need to make sure that we can get a commitment from them as well. I don't know. There are some loan officers where you just tell them, I'm making $100,000. This is my debt. And they give you a pre-approval without checking anything, right? That can jeopardize your whole deal because later on, if you can't get the mortgage, you already put your earnest deposit, right? You already put some money on the contract, $5,000, $10,000. We don't want to jeopardize that. So we want to have a financing contingency in the contract. So this way, if you cannot get the loan, you're still protected, right? So if your loan gets denied, then that will allow you to back out of the contract without paying any fees and getting your earnest deposit back because you couldn't get the loan from that company. So pre-approval is not your commitment. Pre-approval, it just tells the borrower, hey, go find a property, in that price range. A commitment is actually when your lender reviewed your full mortgage application, underwriter actually reviewed it and approves it, stating that, hey, here's the loan amount, here's your terms. Now you can go ahead and start working on your conditions. So you always want to include a financing contingency in the contract to protect yourself. Okay. Then Mr. Buyer, you would have a title company. You don't want to hear, hey, my grandmother left this property for me on her will. That's too bad. We already closed on this deal. We have a clear title, right? That is that is why we need a title company and title insurance. So the title company is going to verify the ownership history. They go many years, sometimes 50 plus years. They check for any open violations, any open permits, any open liens, anything that has to do with the property. We're going to see it on the title report. Right? All these questions will be answered on your title report. What we want to hear from your attorney, Mr. Buyer, is that we have a clear title. If there are issues, then we would need those issues to be clear. Let's say there's an open permit. We want to have the listing agent make sure talks to their seller or the attorney talks to the seller and resolve those issues before the closing. We need a clear title. Okay, once we hear a clear title, then you need to pay for your title insurance. It's going to be part of your closing cost and is usually 1% of your purchase price. It protects the lender and it protects the buyer. Okay. It is a one-time fee. This is a very common question, guys. It's a one-time fee. Some people think that it's going to be happening on a yearly basis. It is a one-time fee that protects you for as long as you own the property until you decide to sell it. Okay. Then one of those last stages, that one of those conditions will be your home insurance. The lender wants to make sure that you're getting this loan and you have home insurance that's going to protect you from fire, from lightning, from windstorm, hail, or any of the other covered events, right? So you want to be protected. You don't want to have a loan that's for $500,000 and your property, God forbid, it burns down and you don't have any money to rebuild it. You need your home insurance, Mr. Buyer, and it also protects you if someone wants to do a lawsuit against you. Let's say they slip and fall right in front of your property or in the house and they want to do a lawsuit. This insurance is going to cover you from that as well. So you want to shop around with at least two or three companies to get a price quote. Typically for a single family, the lowest we see is around $1,200 price per year, premium per year, ranging up to $2,000 for a single family. Okay. We also want to do a survey. This is going to avoid any disputes with the neighbor, right? Where one property's ends and the other line begins for them. We can have, if there's any common issues we see is shared driveways or broken fence, right? We want to see a map of our property that shows, hey, this is my lot size. This is where my boundaries and this is where my dimensions are. If I'm buying 23 by 100 lot size, I want to make sure that I'm getting every inch of that. The cost for that is usually $500 to $700. And many of you guys requested this, so I added a photo what a survey looks like. Okay, it's usually just one page. It tells you which street your property's on, right? What's right front of it, what's on the sides, and it will give you all the dimensions for your property. Okay, and you save that for until you sell that property. And if there's any disputes with your neighbor, you show them, hey, here's my survey, you do yours, and we can take it from there. Okay. Next, Mr. Buyer, I told you how we're going to protect you with those contingencies, but let me just go over your process and how many days does it typically take to do these steps. So when it comes to pre-approval, you want to spend at least 1 to 2 days getting shopping around with at least two or three different loan officers. That can be done in 1 to 2 days. When it comes to finding a property, we know that there's going to be a big purchase. So sometimes if you're really aggressive, we can find it within 3 to 4 weeks, right? Really depending on your situation, how fast you want to get this done. But anything that comes on the market, I'm going to be showing you, right? Right on the spot. Maybe it could be the next day, whenever your schedule allows. But once we found that property, then we want to go back and forth with that listing agent for at least 1 to 2 days, sometime up to 3 days, and negotiate, right? We want to put in an offer. Maybe we put in our initial offer. They come back the next day and they want to do a counter offer. And then we go from there. So that part, I'll be handling it, but it typically takes 2 to 3 business days. Once we have an offer accepted, we want to do a home inspection within 1 to 2 days. Usually, I want to do it within 24 hours. So if there are any major issues, so we renegotiate right away. Then we have the contract. Just remember the buyer, Mr. Buyer, you going to be signing first and giving your earnest deposit, right? The funds on the contract, then the seller will sign. This is a very common question because some people think that seller will sign first. No, it's always the buyer signing first. Okay. Now we have a fully executed contract, right? You have the seller and the buyer signed it. Now your loan officer can start the loan application, and that will take 1 to 2 days. And then that same loan officer is going to order a bank appraisal. We already spoke about that. That process usually takes 5 to 7 days, where bank appraisal comes into the property, takes notes, takes all the measurements for all the rooms, and that person might take few days to provide a bank appraisal report. You're going to be working with the same lender, same loan officer, working on those conditions. They gave you a commitment, but you need to be working with them to clear your conditions. And that might take 1 to 2 weeks, depending on the lender and depending on how fast you provide those conditions to them. We spoke about your title report. Title report is going to get ordered by your attorney, and that takes about 7 to 10 days to come back. Okay. So this whole process that we spoke about so far, we can get that done in the next 30 days. Once we have that, just remember the closing disclosures. Your loan officer have to review all the final numbers so there's no surprises at the closing table 3 days prior to the closing date. Okay, that is a law. So if they're buying a single family, two family, you should know every cost that's going to be happening at the closing table. So your loan officer needs to review that 3 days before. Okay. Then I'm going to come back in this picture again, guys, as your final walkthrough, right? Guide, I want to make sure this is going to be your last chance to view the property before signing your closing documents. We want to make sure that everything is in working order, everything is same as we saw it in the first time. We want to verify if we agreed on any repairs that they were completed, right? Anything on the contract that we put down, we want to make sure everything is satisfied and the property is completely vacant. I don't want to see big furniture there. I don't want to see any people living in the basement or whatever the case might be. We just want that vacant completely. And we want to do a we want to do a final walkthrough usually within 24 hours of the closing time. Okay, sometimes we do it the same day. It's perfectly fine. If there are any issues, then the buyer's attorney can hold some funds in escrow and still gives maybe 30 days to the seller to fix that issue. If not, then you would get that money and you can fix that issue. Okay, guys, today is going to be the closing. So now you're going to be a homeowner. So you want to make sure you bring a valid photo ID at the closing table. You're going to bring certified checks for the closing. Your attorney will give you the final amounts and will let you know who the checks should be made out to. Okay, and closing usually takes about 2 hours and you get the keys on the spot. We don't want to do any post possession. And quick tips for you is that you want to change your locks within 24 hours and you want to change the address with your post office and call the utility companies and transfer everything under your name. Okay? So why use a realtor? You need a professional on your side. You need an expert that's going to give you guidance and give you local knowledge, right? So a real estate agent knows the market, including the neighborhoods, your property values, and your market trends. We have access not just to MLS, not just what you see on Zillow, guys. We, Mr. Buyer, I have access to some, private listings as well. So it's just not public, right? And I'm skilled to negotiate for you. So I'm going to be always thinking about your best interest. So I know a home buying process can be complex, can be overwhelming, but I know the market and I can get you into your dream house in the next 30 to 60 days. Okay. And when it comes to neighborhood search, I have tools that I think I'm gonna bring this slide up, guys. It's gonna give you your safety, how safe is that neighborhood? So the crime rate. I'm gonna tell you about the schools, your amenities, everything overall vibe for that neighborhood or that area, right? Before committing to purchase or putting in an offer. I'll do all the research for you. And one of those screenshots that we're gonna be providing, this is what the schooling grading looks like. Right? If there's a grading of C, B plus, C, any of that, maybe you don't want to be in that neighborhood, we can look into a different one. Okay. So my service is not free, right? I am going to be providing a lot to you. So one is that anything I'm about to talk about in the future here, I want you to call this legal hotline and you can and ask them about the following. There was a new law that started in August 17, 2023. Sorry, in 2024. I need to update that. So this commission that we're talking about, on your request, we can ask the seller to pay for that. If the seller decides to pay any portion of that, then I will deduct it from the amount that we agreed on. To give you an example, if we agree on 2% and the listing agent is providing me commission of 1%, then you owe me 1. Okay? Then I want to give them resources, guys. You want to track interest rates on daily basis? Go to mortgagenewsdaily.com. This is going to be a really good source for them. They're going to be glad that you provided this website to them. Okay, Mortgage News Daily. Then tell them if you need any down payment assistance programs, you want to go to downpaymentresource.com. You want to go to a government website and see the whole buying process, similar to what I'm talking to you about right here, you can go to consumerfinance.gov. You want to find out more things about our real estate and all these changes that are coming, you can go to nar.realtor. And if you want to go through all the loan option, you can go to ljmortgageteam.com. I know it's a shameless plug right there, guys, but we want them to come to our LJ Mortgage, click on loan options, and see all the loan options that are available there. Okay. And our goal, this is the last page for them, that our goal is as a realtor is to guide you through the whole home buying process. We want to ensure your interest, your best interests are always protected. And I want to be there every step of the way. So let's get started, start viewing properties together. And if you have any question, Mr. Buyer, tell me before I give you these agreements to sign. Okay. So, Mr. Ali, you're here. Trisha, you're here. Anybody that's watching live later, you guys want to come up and talk to me about this, that's perfectly fine. But provide any feedback. What should we be adding, removing? We have next 5, 10 minutes here. So there are about 30 pages, right? Anyone? How is this compared to the last presentation that we have? All right, maybe you guys don't want to talk right now, but I'm going to be sharing these slides with you guys as well. So you guys can tell me anything that you guys want to add, remove, even if it's a line or two, that's perfectly fine. Provide those feedback, and then we'll take it from there, right? All right, guys. And if you guys want to connect with me at any time, there's a very common question. Is this a good time to call me? Right? I might be busy with this or that. Just remember, guys, I'm here for you guys. So you just call me, text me, send me a message in Teams anytime you guys want. If I can't pick up or respond right away, trust me, you will get a response the same day. Okay? And just remember, if you're not showing properties on a regular basis, you are not going to be closing deals on a regular basis. If you want to make a career out of this real estate license, you have to be involved. You have to be willing to speak with plenty of buyers, providing this presentation and guiding them. And then hopefully they stick with you. Not every one of us or will get every yes that we speak with, right? Even if you're speaking with 10 different people, 10 different presentations, even if 3 or 4 of them sign your agreement, that's perfectly fine. Just be okay with a no. If they're saying no, if they're not saying no to you, they're just not ready right now. Just move on to the next person that's going to be ready for you. Okay? With that, guys, that'll do it from my end. Thank you so much for joining. I will see you guys next time. You guys take care.